I'm Ryan Kazmierski, editor of American Hard Assets, and this is Tuesday, August 13th, Market Minute. Today we're joined by USAGold's chief market analyst, Peter Grant. Peter, gold took a little bit of a dive today after a good session yesterday. What are the reasons you're seeing in the market for that dive?
Sure. I think it's generally normal corrective pressure given the magnitude of the gains that we did see on Monday. We got into resistance around 1348.5, did not break through, and so perhaps a little bit of profit taking. Again, I think there's also a rising expectation of Fed taper in September. It seems the vast majority of analysts are in fact anticipating the taper to begin in September. Kind of a mixed retail sales report today, missed on expectations on the headline number, but a little bit better than expected on the ex-autos number. So again, I think that just sort of feeds the taper expectations a little bit, and I think that might be weighing on gold a little bit today.
On the silver side of things, you haven't seen as much of a correction. It kind of jumped up about $1 yesterday, and it's coming down a little bit, but not nearly to the severity that gold is.
Yeah. So silver did break the corresponding resistance level, and consequently, we saw some buy sells, some buy stops triggered. That's underpinning the market. The fact that we are above that resistance level. Where we're seeing the correction is in the gold-silver ratio, which ran up quite high in recent months, kind of approaching the 70 level. So in other words, it took 70 ounces of silver to purchase 1 ounce of gold. We've in subsequent sessions, the ratio, which became quite overbought, is retreating and under pressure, and has traded below 62 today. So silver, which had been correspondingly out of favor relative to the rise in gold, is now we're seeing an uptick in buying interest on the silver side.
When do you see the ratio getting back to where it normally is in that lower range?
That's a good question. We're a long ways away from the median, which is sort of around 18 to 20 historically speaking. So we're quite a ways away from that. I don't envision us being going to that level anytime soon. And I think a lot of it has to do with the kind of revived perception of gold as a means of wealth preservation. The silver market tends to be a bit more of a speculative type investment, higher beta in the silver market, much higher volatility. And so people who have kind of gravitated towards gold as a means of wealth preservation, that has sort of led the ratio into the higher realms of late, and I think that it's likely to remain elevated for some time.
All right. Well, I appreciate your time on this Tuesday afternoon, and hopefully see you down the road a little bit.
Thanks, Ryan.
Today's Market Minute from American Hard Assets.